Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, everybody. And this is the continuation of our last week at work under the company account. And the format of the company account, you need to be with me because of the space and the space of the board. I will not be able to have the length format of the trading profit and loss account. But to start, the reason why I did not show the format of the trading profit and loss account is what we all have been used with, and we have the same format, and the only simple minor changes that will be there I will explain. The first one, the trading profit and loss account, remember, we have the opening stock, and we have the hard purchases. In case if your purchases need a little adjustment, that is, purchases had carried inward, less return outward. You add it to that is the net value of the purchases to the opening stock, and will give us cost of goods available for sale. And after that one, you less closing stock. When you less closing stock, will give us cost of goods sold under the expenses side. Income side, we have a sales less return inward. And if you now have sales, net sales minus cost of goods sold will give us a gross profit on the debit side of the trading profit and loss account. Once you have a gross profit carried down, you move to the other side, you have a gross profit brought down. Under the where you have a gross profit brought down, and you have, if you have an income received, must be under the same your gross profit. And if you have a discount receipt, you have a rent receivable, everything will be there. And you now move to the expenses side. Under expenses, we have the normal expenses, whereby you have a wages and salary. If you have a rent and rate, if under the rent and rate you have accrued, all the accrued expenses under the additional information must be added back to the expenses concerned. But if you have expenses that have a prepaid under the additional information, we need to minus it from the expenses concerned. And the certain things that's different from the normal trading profit and loss account is, which will be part of your expenses, is audit fees. We have a director remuneration, and we have a debenture interest. Debenture interest, if given under the trial balance, and you have it under additional information, whereby you have a debenture interest accrued. That is the debenture interest, that's the loan acquired by the company and need to pay interest on it maybe every month or every year or quarterly. And if the interest have not been paid up to date, the remaining interest that have not been paid will need to appear under additional information. And that's why you have the debenture interest accrued, you add it back to the real debenture interest. And that's the only thing. And you now total the expenses side minus the income side, and you have a net profit. The net profit under this one, we have it as a normal net profit. But the continuation of the account, this profit and loss appropriation is different from the profit and loss appropriation of your partnership account. Remember, the profit and loss appropriation of partnership, you have a net profit on the credit side, you have the interest on drawing on the credit side, whereby you have the salary given to active partner, and you have the interest on capital, and you find the difference, and you share the profit. But for the case of the company, whereby the profit and loss appropriation is totally different from the profit and loss appropriation of a partnership account. Here you have the first thing you need to take note. Under the trial balance given to you, you'll be given profit and loss for the last year. Profit and loss for the year will represent the profit and loss for the last year, which will be transferred to the credit side of the profit and loss appropriation account as your balance brought down. The trading profit and loss account you prepare, you arrive at the one net figure, which is referred to as a net profit, your net profit will now be transferred to the same side of the credit side of the profit and loss appropriation account. Come back to the debit side. This debit side, the short way to quickly prepare because of the examination time, and you first of all consider all the items. The item concerned under additional information, whereby you have a general reserve written off, you have a goodwill written off, and all the item written off should be transferred to this debit side of the profit and loss appropriation account. And now follow, if you have a corporate tax, will be transferred, and you have a proposed dividend and interim dividend be transferred to this side, and you now calculate and transfer to this side, and you now total this side minus this income side, and you have a balance carried down. The balance carried down under the profit and loss appropriation account, we call it a unappropriated profit, and you close your own account. And back to this balance sheet, the final account of this company account, we have the same format. Let's first of all treat the credit side or the asset side of the balance sheet. And if you look at this one, we have the same format with the Warmer business balance sheet or the partnership balance sheet account. Here you have a fixed asset. Under the fixed asset, if you like, you can start with the intangible asset. The intangible asset, example of intangible asset is goodwill. You write the value of the goodwill, but the goodwill whereby you have the original figure, the written off figure given to you, you minus it from the original value of the goodwill will give you the net book value. And you now move down to the fixed asset. Under the fixed asset, all the asset concerned, you have the cost price, the depreciation either given or calculated by you, and you minus it from this cost and will give us the net book value. And after that one, we move down to the current asset. And when you now move down, we move down to the current asset we have a stock, we have a bank, and all the prepaid expenses, and we need to consider it. And after that one, the last asset which we need to take note is preliminary expenses. Preliminary expenses, we have a PRELIMINARY. Preliminary expenses is, and you underline, and that's a formation of expenses. That is, the formation expenses is your preliminary expenses and is part of your asset. And we now come back to this, the capital side. You need to follow the format. Not that maybe the one I know will come first, you follow the format accordingly. To follow the format, we have an authorized capital. And authorized capital, we have the ordinary share and we have a preference share. The authorized capital, we used to have this figure under the introduction of the question given to you. And when you have an ordinary share, you write the figure, you write the preference share figure, and you total. To total, and you write the double line. You draw the double line before you continue. And after that one, we need to move down to the issued capital. Issued shares or issued capital, you have the necessary information concerning the issued share under your major burden of the trial balance. Here you have the ordinary shares. The ordinary share, you have the figure, and here you have a 5%, either any number of percentage given to you before they write a preference share. You have the figure. And when you have the figure, remember the ordinary share. How are we going to know the value of this issue share if the issue share is not given to you under the major body of the question? And you have the issue share, and you get that one from your own format note. That's the type 1. And here you have ordinary share. Let's assume you are giving ordinary share 200,000 ordinary share at the rate of 50 kobo each. That is 50 kobo multiplied by 200,000 will give us the number of the issued share. And the preference share, you have a 750,000 had rate of 750,000, 5% preference share had the rate of a 60 kobo each. 60 kobo multiplied by 750,000 and will give us the value. That's how we can get the issued share. And after that one, after issued share, the next one we call it a capital reserve. Here, when you have the capital reserve we have the example of the capital reserve whereby you need to look for it is share premium. The value of the share premium, you transfer it to the column. After that one, the next one will be the capital. We have after the capital reserve, we have a general reserve. Then under the general reserve, we have the general reserve. We have a retained profit. Retained profit. How are we going to know the retained profit? Your balance carried down under the profit and loss appropriation account. Your balance brought down, it carried down is referred to as a unappropriated profit. That is retained profit. You transfer to this account under the general reserve. And after that one, we move down to the long-term liability. The long-term liability here we have a debenture. Debenture figure and the accrued value of the debenture should be transferred to this column also. And after we move down to the current liability. The current liability will have the normal items under the current liability, whereby we have a creditor, we have all the accrued expenses to be transferred to this one. And after that one, we now move down to the proposed. We have a proposed dividend. Proposed dividend, the value of the proposed dividend should be transferred to this side. And if you do everything, calculate everything perfectly, your capital side, when you total it, must be the same with the asset side. And because of the time, and we try to lay that is, use this format to practice any question under the company account. You practice. When you practice, does not mean you must maybe crack your brain to balance everything, but whenever you come back to school, being that you always practice and you're already conversant with all these terms, and if you're now trying to revisit or revise this particular topic, all the new item will not be straight to you. So I pray for Almighty Allah to give us the wisdom and knowledge to understand all we have discussed so far. Subhana rabbika rabbil izzati amma yasifun. Assalamu